Yo, good morning, everyone, and welcome to the Morning Market Report. We got a little bit of green bubbles today, a little bit of mixed markets overall. Looking at the, a TradFi side, we got the Dow Jones in the red, S&P's in the red, NASDAQ slightly in the green there, pulling back, though, only getting ready to turn red right now as we speak. And Russell 2K, guys, VIX is pumping back up. That's why we had the thumbnail we had today. I think we're going to have a little bit of a pullback, so we're going to be watching for that and talking about why. Also got an article on it. But yeah, looking at the Bitcoin chart right now, guys, we are rejecting exactly where we talked about yesterday, that 50% fib level. Yesterday morning, we had a pump, and I said, guys, watch this level right here. And if any of these things happen, we could see a pullback. And what did we get? An actual pullback exactly at that level that we talked about. So we're going to be breaking all this down and more right here today on the Morning Market Report. Let's get it. You guys know what time it is. Class is in session. Let's go. Yo, good morning, everyone, and welcome to the Morning Market Report. Shout out to everybody in the chat right now. If you guys didn't see, I have a new emoji that I dropped in there for you guys on behalf of Alexandra G. In the spirit of Alexandra G isms, we dropped an emoji in there. It's holy balls. So if you guys got the membership, go ahead and drop some holy balls in there because Piper's bearish today, man. What's new, right? Look, I can't be bullish until we can hold levels that are key levels that we just keep rejecting off of. We do eventually come back and break above them. We're above the 200. We're above the 200-day right now. We're above the quantum reactor. We're above the dynamic reactor. But when Trump can come out and say one thing about tariffs and it dumps the markets back down, that is where we are sentiment-wise. We're going to be looking at the trade longs versus shorts today on the centralized exchanges. Look at some heat levels and stuff like that. But yeah, I'll explain more into the show why I am feeling the way I am. Plus, it's not just me. There's a pretty good article that was the baseline for today's thumbnail. More downside coming. So Piper likes milk steak boiled over medium on the side of the finest jelly beans. Appreciate you, username. If you guys don't know, username and I we've been having our ongoing battle about rib chat and how we prepare our ribs. I boil mine according to him and according to me, and a source, a reliable source. A source has indicated that he buys microwaved heat and eat ribs. He doesn't even know how to cook them. So it is what it is. It is what it is. So shout out to everybody in the chat, guys. Let's go ahead and get into this. Let's bring up my co-host for today. It's the OC guy. What's up, bro? How you doing today, man?
I'm doing fantastic. I mean, I did have a couple of technical issues on my mobile setup. That's why I've been absent. And of course, I don't have my green screen. But other than that, doing great. I'm missing my coffee, so I might be a little grumpy. So watch what you asked me today. No, I'm just kidding. I might not just be as energetic as always. Other than that,
This guy.
that direct.
This guy. So you got to do like I do. Don't use a green screen. Don't use a green screen. Just build a high-tech digital studio. And this is not a green screen. This is real. I can go back in and touch that plant back there. No, not really. It's nice. That's all a lie. All right, let's go ahead and get into it. Yeah. Oh yeah, you can touch stuff too. Nice. I can touch my coffee cup though. OC, that you can't do.
I can't. Nice.
All right.
Oh man, enjoy.
I want to go jump in and talk about Bitcoin first. I want to show the chart and what we were talking about yesterday, because yesterday morning, I showed a level. I said, look, here's the bottom line. And I went over and I talked about this X post. I said, we got a pump going here, right? This is yesterday morning. We were about right here. I said, we're at resistance of a value area low. We're also running into the 50%. And if we reject on that 50%, that's typically a bearish move. I also talked about the X post that I from yesterday from Rob, and said he's 100% correct on this. Where are we at? There we go. I said he's 100% correct on this. He said, we are so back because everybody was bullish yesterday until someone mentions tariffs, inflation, no rate cuts, so on and so forth. Guys, last night, Trump came out, talked about tariffs. He said April 2nd, reciprocal tariffs, blah, 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 blah. All he had to do was say tariffs, right? And so what happened at that point, we immediately started getting rejection to the downside. Now this is our resistance again. So that move to the downside just off of that, guys, to yesterday, that was about a 2.7% move. So if you guys had this measured from the 50% to that pullback that we had, that would have been about a 2% move. So a 10% leverage or 10x leverage. That's about a nice 20% move there. So that was the reason that I felt yesterday was going to be a pullback moment, because despite everyone being bullish and the prices moving up, we were running into some key resistance areas. And to top it off, it had been a while since Trump said the T word, right? So there you go. Now we are looking at this level again. So looking at how, looking at this from that perspective, I do think that we could see some pullback down here today. Let's go ahead and jump over into the news, and let's get this going for us, guys. Talk about all the news that's fit to be news, and then we'll come back around and take a look at what we're seeing on that Bitcoin chart and where I think we're going to be heading today. Looking here on Into The Cryptoverse, guys, we are currently sitting at a total market cap. Let me refresh this. I want to make sure I got it right. 2863. Yep, 2863. $2.863 trillion right now is the current total market cap. Trend line on that is at 3.621, meaning the median average of the market cap, guys, as it runs throughout history here. Undervaluation right now, about 20.92, a little bit under 21% is the undervaluation right now. So we are still in the undervalued mark. Bitcoin risk level is at 50% today. And then looking at the Bitcoin dominance with stable coins, it's at 60.66%. Without stable coins, it's at 65.93. So we're starting to see this close out a little bit. Little less money going into altcoins, or stable coins, I mean, and a little more going into altcoins. So that's a good thing to see if you want your alts to move, right? But as of right now, I'm still focusing on Bitcoin, and Bitcoin. That's my top three right now. Let's go check out the Fear and Greed Index, guys. See how that's looking for us today. We are currently sitting at a 46. We're in neutral today still, so still sitting neutral. No fear there in the greed index. So crypto bubbles, go check out the current prices here. Bitcoin right now sitting at 87,515. We do have that CME gap down at 84.4. I want to remind you guys about that, so keep that in mind. I believe that by this weekend we might pay a visit down to close that CME gap. Will it go lower than that? Some people say yes, some people say no. No one knows for sure, but we do know that the price action is at resistance right now. So we'll have to wait and see what happens when we get there and make that call at that point. Make sure you guys are in our Discord. If you're in our trade group over there, there will be talks when we get down to that level, what the support levels are. So JR will probably be dropping that. So will I. Lunar Beaches, whoever, Tradefly, we all drop charts in there all the time. OC used to drop a lot of charts in there, but OC hasn't done it lately. OC, we need to get you back and dropping those charts, bro. Looking here at Ethereum right now, it's a little bit over $2,000. It's above that $2,000 level, but it is down 1.2% on the daily, pulling back here on the hourly. Looking at XRP, neutral on the hourly, down 1% on the daily at $2.43. Any big movers? I just want to focus on the big movers today. Doge is up 5%. That's not bad. Well, it just moved. It just changed to 4.7. So there you go. Anything else change? Oh, wow. XRP, we're right across the board there. There we go. Chainlink is up 0.6% on the daily, taking back half of that amount down to negative 0.6 in the past hour. $15.31 is the price on that. Currently, Avalanche is up 2% and moving up one spot on the top 20 here. Leo token moving back up, but it is down on the daily, making some recovery on the hourly there. Toncoin dropping 2 spots and losing on the daily and the hourly here. Any big movers, man? It's just really stagnant today, guys. Onder's up 3.1%. There you go. That's not bad. Chronos. Holy balls. There you go, Alexander G. Chronos, that is the token for crypto.com, their native staking token. It gives you bonuses and so on and so forth. That is sitting up 22.4% today. So Holy balls for the win. There we go. Let's jump over and check out. Oh, S&P and the NASDAQ getting a little bit of flip around. Guys, I'm telling you, everything is just like stagnant and like indecisive. There's a lot of fear in the markets right now, I think, probably because of the data that's going to be coming out tomorrow. Can you come back in for me here? Thank you. Thank you very much. Yeah, down 0.04 on the Dow Jones, up 0.11% on the S&P, and about 0.16 to the upside on the NASDAQ. Russell 2K dropping. VIX is pulling back down too. Let's go check out the bonds. Looks like the 10-year is unchanged at 4.33%, and gold up 0.63% at $3,034. Silver's up, copper's up, platinum's up, palladium's up. Precious metals looking more precious every day. Here's the data that I think that is causing all this indecisiveness and uncertainty, I should say. What's up, Game Face brothers? How you doing? How you doing? Damn, missed the other stream yesterday. It's all good, bro. It's all good. It's all good. At least you're here now. Shout out to Trade Intuition, line of sight on crypto. He's in the house with us. Keith is in here. Crypto Coin Mindset. What's up, bro? How you doing today? JB's in here with us. Dad jokes. We got dad jokes. Alex O's got dad jokes. Alex O's got some serious dad jokes. If you guys don't know, that man got the ha-has. So who else we got in here? Crypto Trades back from his cruise. I hope your cruise was good, man. Hope you had a good time. All right, let's keep it going. Oh, Crypto Billy, I see you. I see you guys. Tomorrow, we're going to have Redman on from the Billy Goat Tells team. He's going to be coming on talking about their new book. We talked about that yesterday. I'm going to get me a second book for my shelf. So I've already ordered mine. But yeah, tomorrow, guys, looking forward to that. Asako Tona and then the Roaming Brave in here with us. Morning to everybody in here. Zareth, 9, I believe that is. What's up to you? How you doing? Wayne C, I see you there. If I missed anybody, much love. I appreciate y'all being here. All right, guys, let's take a look here. This is why I think we're going to have this uncertainty in the markets today and a lot of volatility because tomorrow we're going to get durable goods orders, and durable goods orders right now are expected to be down. That is contracting big time from a 3.1% upside, contracting down 1 to 1.2%. If there's already a headline for it, if there's already a number somewhere, it's already in the markets usually. But if this comes in like 1.5, 2% to the downside, then we could see a lot more volatility and sell off tomorrow. That's going to be coming in tomorrow. Durable goods orders. Okay. Thursday, we're going to get GDP growth rate. It's contracting. Right now, it's 3.1 to 2.3% is the consensus forecast. So that would be a contraction there of about 0.8%. Keep that in mind. Again, if the number exists already, it is a strong likelihood that we could see a sell-off if it's worse than that, because this is what's cooked in, 2.3%. So in the baked goods, if this comes in 2.4, 2.5, even higher, or sorry, 2.2, 2.1, even lower, I should say, that bigger spread will cause market sell-off. That's Thursday. Friday, what do we have there? Core PCE. Core PCE right now expected to be flat. If this comes in at like 0.2, guess what? Sell off. So we've got 3 days of volatility events that could be playing here, and I think that's why we're seeing so much uncertainty today. Matter of fact, let's take a look at this article here. I got an article talking about stagflation. It's on the radar for the U.S. economy, but not going to be a repeat of the 1970 stagflation. Sure, none of you were around. Even I am not old enough to remember what happened in the 70s because I was a kid. Didn't know what stagflation was. Is that a deer thing? Is that a blow up deer? I don't know. There's a joke for you right there. Dad jokes. So stagflation on the radar for the U.S. economy, but no repeat of what we had in the 1970s. Stagflation risk appears higher in response to Trump tariff policies, unlikely to fully repeat the high inflation and jobless numbers that we saw in the 70s, but nothing more uncomfortable than a stagflationary environment, according to a Fed official. Recent economic projections from the Federal Reserve officials had shades of stagflation light, in the words of one economist. A sentiment increasingly echoed among other observers of the U.S. economy and central bank, wondering if the country's outperformance during the pandemic is about to slide. So what is stagflation and why is it suddenly on everyone's mind? I don't know about you guys, but I've been talking about stagflation for about 9 months now, so I don't know why it's suddenly on other people's minds. Stagflation, or a period of both high inflation and high joblessness, hit the U.S. notably in the 70s, which may have featured the worst U.S. economic leadership since the Great Depression. Fed officials had their data and their framework wrong, and elected officials flailed against inflation with price controls and what now seems quaint public relation efforts. Most notoriously, the Ford administration whip inflation, now win button campaigns. So, as economists in recent weeks have begun marking down their estimates of economic growth, meaning GDP pullbacks, so on and so forth, right? And marking up estimates of inflation in the face of dramatic economic policy shifts, aka tariffs, it's sparked debate about whether that could be unfolding again now. And don't forget, we had a situation last Wednesday when Jerome Powell had their data report, right? And they made changes to their report, raising their estimates for the year on unemployment numbers, and inflation numbers. They raised those estimates for 2025. If you're talking about higher unemployment and higher inflation, what do you get? AKA stagflation, right? So in theory, a weak economy with rising unemployment undercuts inflation, so the two should not coexist. But as with oil price shocks in the 1970s that drove prices higher, the tariffs anticipated by Trump's trade policies now has the world guessing. So what he's saying here, guys, sum this up, is that if you have, unemployment rising, that means people as an economy whole have less money to buy things, and that should bring inflation down. But when you have an outside source, which like in the 1970s was oil, that drove up the price of goods, right? Because oil's involved in everything from the shipping it to the moving it on the highway to the making it to the everything, right? So when the oil prices were going up, that caused the price of goods to go up also, which so you had unemployment rising with inflation. In 2025, we have the possibility of unemployment coming up, and in addition to that, tariffs that could be driving the prices higher there on goods. So while they should be going down because that's where we are with economic numbers, we are seeing that we could be getting a little bit of a inflation boost from tariff scares. So that's what they're talking about there. But yeah, at the end of the day, guys, they do think that we could have stagflation. Horrible time for a lot of people, because you have people losing jobs that don't have money to buy things, and even if they did, the price of goods and the services is higher, so they can't afford it and they don't have a job to make money to buy it anyways. It's a really bad situation for recession. So that's a lot of the fear that's going on right now in the market. And we've already kind of seen a heads up on it from the Federal Reserve last Wednesday saying, yeah, we raised those projections just a little bit higher. So, OC, let's go jump into this Bitcoin chart. I'm going to start it off and talk about what I'm seeing on Bitcoin right now on the higher time frames, and we'll bring it back to you to look at the lower time frames. How's that sound, bro?
Perfect. That sounds perfect.
That sounds perfect. All right, absolutely. Let's do it. Just jump over to the chart here, guys. Taking a look here at Bitcoin on the higher time frames. We just looked at that 4-hour. OC is going to break that down a little more for you. Right now, guys, we are getting above our gold band here. On the weekly, I won't lie, the weekly, like I said yesterday, looking a little stronger than what it has looked. I won't say that it's a turnaround. We could still see, like the we could create a saddle motion here that, see how this looks like a saddle? It dips in and comes back again. And that just created this downward motion of the thing here, of the signal line. We could just see that here where this continues to do what we saw back here. And this would have been back in like July 2024. Up through like August 2024. So after that March 2024 all-time high break where we had the slow grind down, and then by the time August came around, we did another rally up, right? That is going to be like right here from this bottom of September, end of August into September, it was when we shot back up. So what I'm seeing currently, we are breaking above the golden line here on the predictive ranges. We tend to trade in between these two levels here. So that upside of that would be like 114,277. Bottom side on that would be like 89,000. We're breaking above that. That's a good thing, right? We are seeing that we're getting a curvature up here on the histogram. Signal line starting to turn. It's starting to get smaller candles here on the Heikin-Ashi, typically indicating upside movement, just like we saw back here. And we are seeing that there is a little bit of, we're getting pretty low here. We're getting into that lower bands here on our oscillator pro ribbon. However, money flow is still red. Volume is still low, which makes me think that we might see a repeat here, because if you take a look here, money flow was coming down, right? Money flow was coming down. We had the truce, the ribbon coming down, right? And volume was pointing down. I mean, these things were pointing down. We're still here right now in the same thing, which makes me think that we're going to get this wave effect and we're going to get a saddling here on the histogram, which would be very indicative of what we saw for this whole period here back from March to August, right? So be cautious. Cautiously optimistic, but cautious is the key word there, not the optimism, right? So, because if we do start to get the saddle effect here, this could just be another downside movement. Now, I do want to point out, if we look at here at 114,371, that would be the top gold band there, because, like I said, we typically trade between our two gold bands. You can see that right there in the previous segment there of predictive ranges, right? If we get up to that 114, guys, that 114 range is going to be the top of our golden pocket here, which every cycle has pretty much been the range of rejection, right? Whether it be the lower band or the upper band, we did have one outlier there. If we look here on this cycle's projection for the golden pocket top, guys, that would put it at like 114,299. Not very far off of what we're seeing there of 114,200. So right there in that range of that upper golden band on predictive ranges on the weekly is in line with the upper band here of our golden pocket projection. So that's what I'm seeing on the higher time frames. I hope that's a little bit of a help for you guys. But if we do get that upside move, I don't think 114 that's pretty much my top side target if we do get bullish price structure going again. Oh, see, what are you seeing on the lower time frames for Bitcoin like this week? I mean, we've got 3 days of economic data that all are projected to be down. I know most of it's baked in, but what's the support levels you're watching beneath us? I know for a fact that we do have the CME gap that's sitting down there, like 84,000. Let me give you that exact level before you jump in on that answer. That level for CME gap's bottom side is coming in at like 84.4. What are you seeing for support down in that range right now? Are you feeling like there's any type of support ranges above that you would watch first? Let's see it on your chart, bro.
Absolutely. So let's take a look at started with the 4 hours. So we just break to the dynamic reactor, and remember that because of what we had here before, which was the goose head, because it had a peak relatively flat. I was expecting a little retracement with a further move to the upside. What happened is that we're having that retracement, that little retracement, maybe a little bit more steep than I was expecting. Therefore, the next movement to the upside might be a little bit dangerous here. Something that is very positive, and we were talking about this, it was that at this point or at that point, we had a very bearish prime score. Uh, Remember that I told you guys that as soon as we start breaking through the dynamic reactor, our prime score is gonna be jumping from very bearish to bullish, right? And that's exactly what we're seeing. So far, despite just candle colors, we are having a couple of green candles here, and we are into an uprising movement here, right? I mean, we need to keep an eye that the data could be bearish and we could be going for farther back support, right? You mentioned the CME gap. I'm looking at 83,373 to overshoot, and that is because usually to fill up those gaps, we usually go fast, right? And then I'm seeing support here, support, resistance, resistance, support, resistance, support, support. So for me, this is gonna be an area to look for, right? To look after. Other than that, let me just bring up my indicators, the rest of my indicators, and see. Look at that. My quantum reactor is coming down here around the same area. So if I overextended or forecasted, we're gonna be having it right down there. So far on support and resistances all the way down to 81, right? What else do I had here? Not much that is really worrying me. We have a lot of support. Despite they are bearish, right? They will be acting as support. So basically, what I'm expecting here, if I can confirm this double top, I expect to come back down here, bounce. Then because it's more bearish, then bounce, and then do something like that. Maybe a double bottom. Maybe create a higher low, a micro higher low in here, and then off we go to the upside. Remember that we are expecting something bigger, right? At this point, this is what we've been talking about for a chance of a further continuation to the upside, right? So I just want you guys to concentrate on this big AF line, right? I mean, it's still a possibility to hit a 67. Yes, it is still on the table. Right now, we haven't made a higher low, so that's exactly what we are expecting, right? I mean, for the best case scenario on daily, I would say that we can reject, or we should be rejecting out of the dynamic reactor, put in a higher low, right? And start creating that uptrend momentum here to then break the dynamic reactor, grab some strength, and with one single candle, maybe get somewhere around 97-ish to then start ruling out the possibility of 66 or 67-ish areas, right? Other than that, in smaller time frames, I think that we could be looking for a possible shorty here, and but we need to be careful because in lower time frames, again, we see the bullish momentum. So let me just get rid of this line. We'll update it tomorrow. We are bouncing off a trend line here, and we could be looking the short at this area, somewhere around 80s, 88, 612. That is because we are below the zero line here, and if we can make a fake out like this or something like that, well, then I think that we could be bouncing back down, making that double top, right? That we were talking about in the 4 hours, and then going to visit the dynamic reactor or even the trend line right down here. So that's what I got on lower time frames. Let me pass it over to you, Piper, and then whenever you're ready, I have Ethereum, Litecoin, OM, and BNB just to give a quick glance to them.
Did you say Ethereum? Is that what I heard? Ethereum?
Yeah.
That's I love that token. Feeth. It's like wrapped ether. It's like wrapped Ethereum. WE. Weeth. Steeth. You got Steeth. You
Wait.
also got Feeth. Feeth.
It is actually Fidelity Ethereum Fund.
Fidelity Ethereum Fund. I like it. Feeth. All right, guys. This is some levels I'm watching to the downside on Bitcoin here, just so you guys know. Looking at the liquidity heat map, we talked about this levels up here last week on Friday. We shut up trade flag, drop those TFs there, drop those trade fly emojis in the chat for trade fly. We talked about this last week, and he was too up here at this level that we were watching was like $88,000, $89,000. We said, look, there's a lot of liquidity up here in this $86,000, $87,000, $88,000 range. And so coming in on that, we had all of a sudden they move up to that and they cleaned out all the liquidity. It was like $2 billion up there. Guys, we've got another one down there. There's 401 million there, 339 million there, 389 there, 400, 464, 473, 571. There's like $2 to $3 billion in liquidation levels down here. That if the price goes down to between 83,000 to 82,000, would clean out all of that liquidity. I do think that we pay a visit down to there, especially this week if we get that data coming in on Wednesday, Thursday, and Friday. 3 days of economic data. Your macro side that you need to be aware of, because at the end of the day, no matter what the chart says for price action, price structure, if we get bad macro data, it will sink the markets. Because until Bitcoin becomes more than a risk asset, that is going to be the case. So a lot of bullishness out there right now. Let's go over, take a look at what we're seeing on the longs versus shorts today, guys. Right now, if we go down here and we take a look on 24 hours, this is Bitcoin longs versus short ratio charts. We're sitting at about 50% short, 49.8% long. So the differential there, less than 1% between the two. If we look up here, down here, take a look, you can just see Bitcoin on Binance, OKX, like it's about 50-50. So that indecisiveness in the market means that there's not any one side or the other that is more that has more buying or selling pressure. It's pretty even, and that means that you could just get a nice little ranging area in here, but it would not take that much for one person to give up and the other side just sweeps either up or downside. And if it's bearish information that comes out that scares the investor side of the market, then it will dump because why? Because Bitcoin is just another tech stock, not a market hedge, according to a study recently. You like that little segue into that? Bitcoin is more closely correlated to the NASDAQ than it is to gold most of the time, and investors could benefit from viewing it as another big tech stock. Bitcoin's correlation with the NASDAQ is currently about 0.5 after it approached 0.8 earlier this year, according to the bank. Meanwhile, its correlation with gold has been falling since January, touching zero at one point, and is now just above 0.2. Bitcoin trading is highly correlated to the NASDAQ's over short time horizons. Standard Charter's global head of digital asset research said in a note on Monday, this NASDAQ correlation leads to the idea that Bitcoin could be included in a basket of large tech stocks. If it were included, the implications would be more institutional buying, as Bitcoin would serve multiple purposes in investor portfolios. Even though Bitcoin is frequently viewed as digital gold and a hedge against risk facing the traditional financial sector, Kendrick says he still sees the flagship cryptocurrency serving that purpose, but in reality, the need for such hedges is very infrequent. So as of right now, Bitcoin still a risk asset, according to this article here, and right in line with the Mag 7 stuff. So when you guys see NASDAQ pulling back and things that would scare market buyers from buying something that's extremely overbought right now, then on that front with Bitcoin, you should see the same mentality. I do think that someday Bitcoin will be digital gold, and that's how it will be looked at. But until it breaks away from that NASDAQ price action cycle, then we will see it get risked off just like everything else there in the NASDAQ. So pretty interesting article. But yeah, I'm watching those levels on the heat map that we have down below us right now. OC, I'm going to kick it back over to you, and let's go ahead and run into FETH, some Fidelity Ethereum there, and whatever else you got on your charts. Let's go, bro.
Perfect. So basically, just looking at Ethereum here, F Ethereum, but I think that we are looking to on F Ethereum at this point. Why? We were talking about this movement here, and remember last class that I told you guys that, well, since we didn't have the needed breakout, violent breakout that I was expecting, well, then I was willing to keep my analysis after the actual range, right? And that's where we replicated this breakout retest on a breakout retest. Quick shout out to Alex O, because in the class he gave this entry right here. Although our entry was at the breakout retest somewhere around this area. So basically, we are supposed to be on profits. Hopefully, you are on profits. And for us, or for me at least, it's time to start taking profits. And I'm gonna be calling out this trade good and for all. So I'm not gonna be keeping anything else on this trade. I'm gonna be closing it, and that is because we are, yes, above the zero line. So why am I closing it? That's because we are in red at this point. My prime score is still very low, and yeah, maybe we have the chance to start breaking through. But if we break through here, I will be just waiting for the retest, and then off we go to my next alert all the way around 2,335. But at this point, I think it's too risky to begin with. That's why we call it FETH, right? Fidelity Ethereum, because it was not behaving as expected and even having some scamming action, right? But other than that, looking great. If you're planning to jump back in, or you want a setup to jump back in, remember, for a bullish scenario, breakout retest enough you go, or for the bearish scenario, as we start breaking this trend line right here. So let me just clear this up. And what we can do is just remember, right click in here, lock it. Once again, right click on it, and then set an alert. And then you can name it whatever you want. I'm just going to click OK. And whenever the price actions gets somewhere around here, I could be looking at my oscillator, and then based on my oscillator predicting for a bounce up, right, which is going to be my entry, or a breakout retest, and off we go. So far, we still need for the action to do something, and I am basically out of this trade. In fact, I was out from since yesterday. So basically did not got all the way up, but still I'm pretty satisfied on how Ethereum behaved this time. Let me go over really quick to the rest of those. Litecoin, not really having the breakout that we are expecting. It is still within the range. We are still aiming for the top of the range and the bottom of the range. At this point, it's doing basically nothing, just covering over the center. Yes, we are above the zero line in here. Look at our consolidation score. It is trying to break through. So I want to see either a sweep of the lows for my entry to the upside, right? And for that, let me just clear the previous analysis in here. And I'm going to be moving slightly my alert right there, start to take some profits. And also create another alert on this trend line here. So as we talked about, it's looking good. I mean, we can absolutely break through and continuing down. But looking at Bitcoin, I don't think that this is going to be the case for at least for this week. I could be wrong, but we are above the zero line, and that is a good signal that we could be heading back up at this point, right? OM looking good in here. We did took an entry on long in here. It stopped me out. That's fine. Then what happens? I enter for a short, took early profits, and at that point, it stopped me out on profits. So one entry played out very nicely. Basically, a breaking even between these two signals. So my stop loss, look at that, man. It was so close, but we also need to respect our own stop losses and strategies, right? Other than that, let me just get rid of all of the spaghetti so we can do the next setup. And for me, the next setup, it's going to be a big candle to the upside. We have a hidden bearish divergence, which for me will be just a retracement to the zero line, which at this point I think is going to translate to something like this. So just going to this trend line and then a possible setup to 728. So wait for that one. I still have a couple of those, but I want to show you one of those, guys. Look at this is how close we got. Oh man, I cannot even draw a circle. There we go. This is how close we got to hit our alert entry for there. Let me show you the actual candle size we were talking about, man. This is I don't know, outrageous. We did not, or I did not enter on this trade because it did not hit my alert, and I forget about the trade. But the analysis was spot on right there. The alert was barely just not ringing, and in this case, we would have been making a very nice trade. But it is what it is, right? At this point, we're looking for a channel, an operating channel. Remember that these channels usually break to the downside. So we need to be a little bit careful on how this plays out. We are having a lower high, and we could be going below our zero line. For me, that would be maybe a fake out or a dynamic reactor retest. So what I'm going to be doing here, I'm going to be grabbing one of these alerts, and I'm going to be pulling it first to the previous low right here, right? And then I'm going to be locking this trend line and adding an alert on the trend line here. Where's my alert? There we go. And this is basically what I'm going to be hunting for, a next long entry, as long as I'm above the zero line, or I have flip of the ribbon all the way down here and not losing the 471. So that's what I got, Piper. Other than that, turning it back to you.
Awesome. Shout out to Buck. He's in the chat right now. He's one of our trade mentors over in our Discord. He said, I think the bigger point is that Bitcoin is being compared to the Magnificent Seven. That's a big deal, guys. Just think about where it came from. Absolutely correct. However, the big seven are not hedges against inflation and against risk markets. So that would be things like your defensive moves, like Walmart, things like energy sector, healthcare, Costco, things that people move to during recessionary fear periods or high inflation periods when the risk markets don't really know where things are going. And so they tend to run the other direction. Right now, Bitcoin, the fact that it's in a Mag 7 comparison is a huge deal for Bitcoin. And that's why I'm a Bitcoin maxi damn near now. Like I told you, the longer I'm in crypto, the more I understand Bitcoin maxis. But it's still a risk asset. So as long as we still have this uncertainty, we're probably going to see some more sell-off happening across all markets, TradFi and crypto. And if Bitcoin's getting sold off, altcoins probably got a lot of pain still coming. Matter of fact, I got an article I want to talk about here. Directly, segueing directly from that comment I just made, U.S. stocks are bouncing back. We've seen that this week, right? But these 5 charts suggest the sell-off isn't over. And if we go down through here, this came from one long-time strategist doubts stocks will swiftly return to record territory. Instead, investors should brace for more volatility ahead. U.S. stocks got off to a strong start this week. The S&P climbed 1.8% on Monday. That brings the large cap index gains to 4.5% since its brief dip into correction territory, meaning 10% or greater pullback, right? Let me get my ticker. I need my ticker up there. Thank you, sir. Some investors are now breathing a sigh of relief and wagering that short-lived correction is likely over. Now that the Trump administration has reportedly scaled back some of its tariff plans yesterday, though, he did double down again on reciprocal tariffs. So, let's go in here. Oh, Tradefly, what's up, bro? Good to see you, man. The things that he's talking about, the 5 reasons why he thinks that there may be more sell-off coming, guys. Paulson doubts stocks will swiftly return to record highs, although he doesn't expect a bear market will begin anytime soon. He does expect stocks could move lower before an eventual buyable bottom emerges. Defensives are still leading. We were just talking about these. The Magnificent 7 mega cap stocks tallied their best day since mid-January on Monday, according to the performance of the Round Hill Magnificent 7 ETF, which tracks that performance level, right? Still, according to Paulson, defensive stocks aren't showing any signs of slowing down. This evidence is by the performance of the Magnificent 7 relative to broader S&P 500 SPX and by the performance of the consumer discretionary sector. So right now, we're still seeing those staples that I talked about, Walmart, P&G, Procter & Gamble, another great one. No one's going to stop buying cleaning products, right? And then the Wall Street strategists, they're still sanguine. Although some Wall Street strategists have cut their year-end targets for the S&P 500, the vast majority have not cut yet. So according to Paulson, investors need to see some genuine fear emerge in the market before declaring the sell-off is over, meaning people still stayed bullish and not so much bearish. And we saw that right here talking about this 50-50 on longs and shorts with Bitcoin, right? And then the average among 21 major street strategists is for the year-end S&P 500 earnings per share to reach $268 and to rise more than 15%. Plus, there's still a lot of investors that are long on S&P 500 futures. He thinks that needs to come down a little bit lower and start to show, again, some more fear. And then the SIBO put call ratio, meaning longs versus shorts on the stock side right now, doesn't have a very big spread. The activity of options traders can be another stock market tell. And according to Paulson, traders' hedging activity still hasn't revealed any genuine concern about where the market might be heading. That likely means we're going lower. To wit, the SIBO put call ratio shown below has only seen a modest uptick based on its 50-day moving average. And then the credit spreads, again, this is one of the things that I've talked about numerous times here on the show, is those treasury bonds and the spread between the 10-year and the 10-year, the monthly, so on and so forth, right? 3-month, 2-year, 3-year. Against that 10-year bond. So that with an equivalent duration has remained relatively steady since the sell-off began. Paulson believes the spread could widen further. If that happens, stocks would likely decline given the strong correlation between the two. Although he doesn't see a recession on the horizon, that's good news. Paulson said the market's growth scare freak out from the past month might not be over, but a leg higher in credit spreads could signal that a buyable bottom has arrived for the stock side. So some just other factors that people are watching, and as of right now, still thinks that we could have another leg lower. That's why we're DCAing into Bitcoin right now and not touching the alts, because if Bitcoin does slide down 5% more, it's a great opportunity for me to buy. However, at that point, alts could slide another 15-20% easily on a 10% move on Bitcoin. So when that happens, I will start to divvy out some of my DCA into alts at the lower points, depending on what I see from the economic macro side. Because if we are starting to get worse and worse data indicating, hey, the chances of a recession or recessionary type environment occurring are starting to show peep their head out, right? Then obviously, then I will then manage my investment risk from that point there with new data coming in, because that's what we do. We take the information, we analyze it, analytical cycle. When we get new information, we start that entire cycle over again, and when we operate on that. So as of right now, I do think we have some more downside coming. I don't know how hard it's going to be, but if we do not make another high above that $109,000, then it is very likely that we could be looking at some of those pullbacks. And for those that have missed that conversation, let's jump over and talk about that for a second. So, we had our 108 and our 109. I did a video on our channel when we hit this 108 point. So was this the top? We came back in, little pullback, came back in, did a liquidity sweep, and grabbed the liquidity above that 108, setting our ultimate high there, current all-time high at $109,354. If we do not get a comeback into this range and beat that, then we have to assume that this was our top. If we do come back and beat it, I'm actually thinking that it's about 114,300. That would be the top of our band here. Golden pocket trend-based fib extensions. Golden pockets have been measured from lows to highs to lows of each cycle, have been the projection of tops a lot in these cycles. And if this was the top, guys, we have also done retracements down to the platinum pocket every single cycle, which is the 786 to the 887. If that's the case, then we could be looking at, not this year, I don't think. I think this comes in like 2026, maybe like February 2026 time period. I think that we're looking at a $36,000 Bitcoin. So we have to get up here and continue this leg up, which would move our spread from this platinum pocket to wherever that is. Let me click this here. Let's grab this. So, say for example, we hit like, 186,000. Then we'd be looking at a $52,000 for our retracement in the crypto winter coming down if we continue to follow that norm. So that being the case, guys, if this was our top up here at 109, then we'd be looking at $37,000. I guess 36,922 would be the level that we would look for there on the bottom to move down. But if we're able to get back above there, obviously this would move this entire shift to the upside for where we go down to in the crypto winter. So I just wanted to break that all down for you guys. Make sure you guys understand we need to see this market make new highs to bring that floor up, right? Because we do tend to go back to the platinum pocket. All right, man. I think that's what I've got. I broke everything out today. OC, you got anything else for the people before we head out of here? You're muted. We got anything else with the microphone volume turned on? How about that?
Not much. Just looking at BNB, looking good so far. I mean, we could be just looking for a retracement to the dynamic reactor right here. So maybe an opportunity for a possible entry will be here. Just remember that we are having a goose head. So in that case, this retracement might be short-lived and then higher movement before the big retracement. So your entries, guys, is not going to be half the way. It's going to be all the way down here. When we are down here, remember, we are looking to flip off the ribbon above the zero line and also holding that support. Other than that, just be patient with what you got on screen. You see that he's been playing out very nicely. It's not been as fast as before, but I think that is to be expected because of Bitcoin movement. Other than that, turn back to you, Piper.
You guys want some hopium? You want some hopium? I got some hopium for you. I got hopium for you guys. I know I'm bearish, but I got hopium, guys. I'm always looking for the data. I can't just confirmation bias is not my thing. If I have information that is that kind of can tie in, maybe give us some hope. Let's go talk about this real fast before we head out of here. So you guys know I was talking about that we had gone into capitulation down here on the minor indicator. This is the hash rate ribbon, guys. We've triggered a buy signal again, but I do want to point out that a lot of times we do see, just like we did here, we triggered that buy on the weekly, but we still had the pull down before we went up, right? Back here, we had the buy indicator fired here. We still had a pullback, right? So during during bull runs, when we get the capitulation and then we trigger the buy, we do have a little bit more downside to go, but then that usually means, hey, your bottom might be coming soon. So there's your hopium for today, guys. We do have the hash rate ribbon firing a buy signal now on the weekly close. So maybe that bottom is coming soon. And when we hit it, when we hit that bottom, guys, we'll be talking here about it. Like, look, this might be it. This might be the level. And of course, at the end of the day, we're just going to continue our dollar cost average based on risk. We have that all in our Discord. If you guys do not know, you get access to the Bitcoin DCA, dynamic DCA plan, the Piper plan. Every Monday it drops. If you're a member here on YouTube, just by clicking join below, $4.99 a month, guys. It's not that much. And every week you get, hey, here's your DCA multiplier. We talk about it all the time. And here's your take profit strategy. So there you go. There's your hopium. There's your hopium for everything. Hope is overrated. It is. You're right. I would rather have facts and data than hope. That's why I don't sell hopium here. I'm not a hopium dealer. Hey, man, you're looking for a little hopium? I got $800 link right here for you. Nope. You're going to get data, real-time data all the time here on this show, and we're going to give you guys an honest assessment. So right now, a lot of uncertainty, some bearish metrics, some bullish metrics, and you're seeing that in the longs and shorts on the charts and the calls and puts on the TradFi side. A lot of uncertainty, kind of neutral. No one's really in the lead right now, pulling us in either direction, but I do think 84,000. Keep your eye on that level. OC, we're about to head out of here. What do these guys get if they smash that like button today, bro?
Oh man, guys, thank you so much for joining today. Also, guys, thank you so much for joining in the late show that I'm hosting at this point. Hopefully you guys are enjoying it. Remember that this is the show, the only show on the internet where clicking the like button gives you power-ups. This time, if you click that like button, a hot, delicious coffee coming your way. Maybe, if you are good enough, an orange juice to mix it with.
No OJ with coffee, bro. Never. All right, man. Guys, appreciate you all. Alexandra G, shout out to you. Much love, lady. You just dropped us 5 memberships here, gifted memberships for the audience. So we appreciate you. You guys rock. And don't forget to smash that like up. You smash that like button, guys. Why? Because those are rookie numbers.
Pump those numbers up. Those are rookie numbers in this racket.
All right, guys, we're heading out of here. We're going to catch you guys tomorrow morning, 10 a.m. Eastern Standard Time. Same thing all over again, breaking down this economic data. Don't forget, we got some data coming out tomorrow morning. So we're going to be bringing all that to you. What does that mean for the markets right here, 10 a.m. Eastern Standard Time. Don't forget to tune in this evening to OC Trading Live with maybe some ooh la la naked charts again. He's going to be on here. Check him out. And then also we've got Markets After Dark, Madhouse with LBC tomorrow morning. Good morning, crypto. We'll be back right after that tomorrow morning, breaking down the economic data, the headlines, everything you need to have knowledge, because knowledge is profit here at the Academy. Until then, trade safe. And as always, use some risk management. Later, guys.
I don't know what they keep telling me. Ain't no school like Piper Academy.
Whoa. I'm going to be live today on J Chains. Follow me on X to get that link. I'm going to be live on J Chains show today. Now we're out of here. Later. Let's go.
I don't know what they keep telling me. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall off. I know you hungry for for knowledge, that's profit appetite. Classes in session, this for the army piper acolytes. Trade flag at the soul train ready. What a line from OCI, from a Mexican spaghetti. Yo, crunch crypto with a deep dive to project dime. And if you like the visual powered by Chart Prime, then you will part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels flow low. Sound off.
To get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude.